Hi, this is Matthew Cratter from Trader University, and today I want to talk about the possibility of a stock market crash in 2020. If you are worried about a bear market, or if you're just interested in seeing how I'm trading these markets, be sure to hit that subscribe button. So let's get started. There were two real canaries in the coal mine that crossed my desk this weekend that I wanted to pass on to you guys. First one, a great tweet from 5 Minute Macro, who's a really good follow on Twitter. He is retweeting a UBS wealth management tweet, and the quote is, "The most compelling bull case right now is that there is no credible bear case." Now, this is a sentiment indicator. These wealth management companies are usually really pretty bad at predicting downturns, and they usually get it the exact opposite. 5 Minute Macro comments, "This type of thinking is usually the most compelling bear case, as it would suggest we're priced for perfection and everybody is all in." This is a misunderstanding about the stock market, that it doesn't necessarily have to go down for a reason, whether there's a virus epidemic or a recession or something like that. It can just go down because temporarily everyone who's going to buy has already bought. This is something that happened in certainly in 99 and 2000, when the last mom and pop investor bought their Oracle and Cisco. That really was the top. So I think this is an interesting data point from a sentiment perspective. The fact that a quote unquote respectable bank like UBS would be actually putting out a quote that there's no credible bear case right now. That's actually quite worrisome. The second thing, second sentiment indicator that I saw that is from a StockTwits email that was sent out. Unfortunately, the link for this isn't working anymore. This was a post by Sentiment Trader, and I went to his website, and this looks like it's a closed post now. But you can see the chart here. What this is total calls bought to open minus calls sold to close. These are call options, and this is a nice measurement of speculative options traders. These are people who are buying naked long calls in order to participate in the market going up, mostly on momentum stocks, which is obviously a strategy that I use as well. But this is quite worrisome. The peak that it's reached here, this is an all-time peak. It's well above the 2010, 2011, well above 2000 as well. Now, there should be some adjustment made simply because options volume trading, I assume, has gone up over the last 20 years. But this is looking extremely stretched. And it can be a sign that the mom and pop retail investor is overextending themselves and just trying to get extremely long. And this usually ends fairly poorly. So I think it's definitely another sentiment indicator to pay attention to. And then the backdrop against which all of this is occurring is that yield curve inversion that is still sort of haunting me and making me wake up occasionally. I remember the last two times it inverted. I was a trader both times. In the late 90s, early 2000, we got an inversion right here. This is the 10-year Treasury yield minus the 2-year Treasury yield from the FRED, the Federal Reserve Bank of St. Louis. And you can see here that whenever there's been a yield curve inversion, certainly since for the last 30 years, there's a bit of a lag. But you can see these gray columns here are economic recessions. And so the inversion of the yield curve has been a very good predictor of recessions and hence bear markets and stock market crashes. Happened again in 2000, happened in 2006, 2007, and was a very good advance warning signal that what this basically means is that the Fed is fairly tight, and a flatter inverted yield curve is usually an ominous sign. And again, you can see there's a lag factor here. These things don't happen instantly. But if we scroll in, we can see what happened. Just as a reminder, we did get this yield curve inversion in, when was it? Yes, late August of last year. And so that sort of starts the clock ticking in my mind and makes me want to, it can be an indicator that we're much closer to the end of this bull market than we are to the beginning, which makes sense. We've been going for 11 years here. There have been a lot of false market top calls. But I think these sentiment indicators can be very good for catching turning points. Now, if we look at some of the momentum stocks we've been trading, they've just been to the moon. So Google, ADSK, these are all stocks I mentioned I was trading in my last momentum stocks video. If you want to see which momentum stocks I'm trading, make sure you've hit that subscribe button. ADSK is another one, just really gone straight up. ANSS, DocuSign was another one. These have all just been performing really, really well. The one that seems to have topped, at least temporarily, and maybe another canary in the coal mine, is Shopify, which has just been a big winner. Reported strong earnings, but you can see that made a very ominous candlestick formation here on high volume. This can be a real sign of a trend reversal. And Shopify has been one of the market leaders in terms of internet companies over the past, really the past 5 or 6 years, I'd say. And if this is putting in a top, that can be another indicator that we may be heading for a severe downturn in 2020. So definitely something to keep an eye on. If you're worried about a bear market and you've never traded one before, and you've watched the video this far, I'd encourage you to check out the curriculum in my Bear Market Trading Strategies course. This is at Trader University. You can click on it and you can see the whole curriculum here. And these are specifically trading strategies that work really well in a bear market and in the transition to a bear market. So if this is something that interests you, I'd like to give you a coupon discount code. If you just click in the description notes below, it'll take you to this page. This is the join page. And you can see all the courses that you'll get access to. Your monthly membership will get you access to all 10 or 12 courses. Swing trading with options, learn to trade stocks like a pro, follow my crypto investments, price action trading, etc., as well as that bear market trading strategy. So you can click on any of these icons, take a look at the curriculum, the titles of the lectures, and see if it's something that interests you. And if it does, just scroll down to the bottom here. You can see the monthly tuition is $125 for 30 days access, but I want to make it better for you. So if you just click right, get it now on this web page, you'll be taken to this page. And if you click right here where it says have a coupon code and just type in YT99, YT99, hit update, and that's going to take $26 off per month. So you can get access to all of these courses for just $99, 30 days access. And there are no long-term contracts or anything. So you can subscribe, you can watch every single course, take notes, and then cancel after 30 days or cancel before 30 days and you won't be charged again. I'm constantly adding new courses and lectures. And so if there's a topic you'd like me to cover on this website while you're a member, be sure to let me know and I'll record a lecture or even a whole course for you. I've recently been working very hard on the Learn to Trade Futures course, and I've been adding new lectures to that every day. There's also some very nice ways to trade a bear market using futures. So if that's an area that you've been interested in getting into, be sure to check it out. Now's a great time to join. And again, it's very low risk. There are no long-term contracts or anything. Watch all the videos and then cancel after 30 days. I'd be interested in your thoughts on this, whether you think this rally's overextended and how you're trading it in different stock tickers that you're looking at. Be sure to hit that subscribe button if you haven't done so already. Hit that like button. And if you want to let me know what you'd like me to make my next YouTube video about. Thanks a lot for listening. I'll see you in the next video.